So I'll probably have a Sade track on tomorrow. So any questions that you guys have? Any questions? Any questions, concerns, stocks that you guys want to look at? I try not to have too many stories or rant on Superfan, Superfan weekend. I really don't like telling stories unless you guys ask me to. I got a million of them. But whatever questions that you guys have regarding the market, put it in the comment section. Otherwise, I'm going to treat this like a homework session for myself. And all I'm going to do is I'm just going to pull up all the stocks that I'm invested in. And I'm just going to look at them, see where they are as far as the charts, see if they're actually on sale. A lot of you guys don't know when stocks are actually on sale. Technically, all right, you guys don't normally know when stocks are on sale technically. Now, technically, guys, as an investor, technically, if one of the stocks that you've been looking for forever comes down to that yellow brick road that you see on my chart, that is the 200-week moving average. So I'm going to write it here. This yellow line that's on my page, guys, this is a very important line. This is one of the most important technical indicators you can ever have, like ever. So the yellow line is I call it the yellow brick road. And it's the 200, and don't get it confused with the 200-day moving average. It's not the 200-day moving average, guys. It's the 200-week moving average. Now, why do investors like looking at this? Because this moving average is the average price of a stock, whatever stock that we put on there. It's the average price of that stock over a 4-year period. And stocks will see their stocks I don't care what the stock is that you use or want to buy. Stocks will see their 200-week moving average on average like 2 to 4 years. So when they come down to the yellow brick road, guys, I wouldn't say it's rare, but it's rare as an investor, right? Let's say you're looking for real estate, right? And you're looking for real estate in certain areas at certain prices. You might only get that chance to buy, once every 4 years. So when the opportunity presents itself and you want to invest in something and it's there, then you got to take a shot at it. There's a lot of stocks that have gone down to their yellow brick roads. Now, here's the key to using it, though. This is where a lot of you guys go wrong. All right. The yellow brick road has to be going up to go see the wizard. When you're on the yellow brick road to go see the wizard. Remember how the wizard lived way up on top of the mountain or whatever the heck he was on? You had to go up the yellow brick road to get there. If that yellow brick road is angled down, guys, you do not want to be around. That tells you quickly. You don't have to go and look at the earnings report. You don't have to listen in on calls. You don't have to call your friends and look at it over 5 or 7 different charts. If that yellow brick road is angled down, say, you know what? I want to buy this stock one day, but I'm just going to put it to the side until I see that yellow brick road angling out or going up. So I'm going to show you guys when you buy something like this. This is Microsoft, guys. This is Microsoft. Where is Microsoft at, guys? The yellow brick road. What have we been screaming? Or what have I been screaming from the mountaintop for the past month? What have I been trying to tell you guys? I kept telling you guys, I said, look, guys, you hardly ever get Microsoft to come down to the yellow brick road. It's at the yellow brick road y'all need to buy. And if you buy it, it's probably going to get a bounce. If it comes back to the price that you bought it for, get out of it. I kept saying it over and over again. Every live, we pull up Microsoft. I say, guys, we just looked at Microsoft for the past, what do we do, guys? This is what I did with you guys. I taught you guys how to do this. I said, look, you don't have to be a believer. I said, you don't have to be a believer. We're going to go all the way back to 2012. And I walked this with y'all. I said, I don't care what anybody is saying on any television station. I don't care what any pundit is saying. Traders and investors lie, guys, but charts don't lie. Charts do not lie, but people do. Charts don't lie. Charts cannot lie about buying at the 200 week. This is 2012. From 2012, I want you guys to watch with your own eyes. This was 2012 coming out of the yellow brick road. This is 2012. Now watch, guys, watch and learn. This was 2012. Watch this. This was 2013. This was 2013. Now, I know you guys are like, is he going to do this every year? No, it only happens once every 2 to 4 years. That was 2013. Keep watching. Keep watching with your own eyes. For 14 years. For 14 years. For 14 years, you could have bought this thing. Look, 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 look. What year is this? This is 2022. That means 10 years went by. 10 years went by. And Microsoft didn't touch its yellow brick road. But if you were an investor like me and you saw this happening, you would have said, Microsoft hasn't touched this yellow brick road in 10 years. To get Microsoft to go down to its yellow brick road, guys, you have to be negative. You got to be negative on the stock. You got to say, this is it. They can't do it again. They do this on purpose. It gets down there and then everybody buys it except for you, because you're listening to people that you're trying to trust on TV and they're not being trustworthy. They're sitting there buying it too. And we all know the signal. All the 1%ers, we all know the signals to buy. Because we come in lives like this and we talk to people that actually buy the market and we show our receipts from it. Okay? You guys need to start, what's the word I'm looking for? You guys need to start vetting who you take information from. Hey, they got to have a strategy. And they got to have a strategy, guys, that works on everything, not just one stock, not just one time period. They have to have the ability to come on, look at whatever stock that you guys want to look at without any fear, tell you what's going to happen before it happens, and then show it to you. Then they don't only have to do that, guys. You have to be able to show receipts from when you buy things. You got to literally be able to show a date that says, I purchased this on this date when it touched the 200-week moving average. If whoever you're following does not want to do even one of those things, chances are you're getting scammed. Now, there's some good people that are out there that aren't millionaires yet. They haven't made any money in the market. So I get it. They want to teach and they don't want to wait 3-4 years to be able to tell you guys what they've learned. The problem is they don't want to tell you that. All right. This is important because I see a lot of you guys following strategies, following systems. And then I'll say, all right, let's take that system right now. And then I'll pull it up and I'll rip it apart in one day. Because I'll look at 3 stocks and I'm like, it didn't work here. It didn't work here. So why are you using it? Oh, because I spent $15,000 on it. If they can't pull a stock from the comment section tell you the strategy, and you guys understand the strategy within 5 or 10 minutes. It's too complicated. You can believe me, or if you don't, like people come in here all the time, but let's keep going. That's why you guys are here. That's why I want you guys to ask as many questions as you want. That's how you vet people. Ask them questions. This is your time to ask me any taken in the last whatever many years. That's to protect my family. All right. In this particular room, I used to, if you know me from any of my other social media platforms, because there's a lot of people out there who are sensitive about where they are right now. They're sensitive about their bank accounts, and it's very hard to talk numbers. So we don't talk numbers in this room. I may talk numbers every now and then, but I'm the host. I can do that. I can do whatever I want, right? But in this particular room, we only talk percentages, and I want you guys to talk percentages on purpose. I don't want anybody to reveal if they're a hundredaire or a millionaire. Everybody's going to get treated the same in here. Everybody. Because everybody can make the same percentage. I don't care how much money you made or how little money you made. I want you guys to start learning percentages, learn moving averages, learn setups on when to get into particular things. We do not talk numbers in this room. All right. And that is to protect both ends. I have clients that have millions of dollars. I have clients that have no money. All right. And I don't want to lose out on great traders or great, insightful moments because somebody feels insecure because they feel like they don't belong. Everybody belongs in this room. All right. I know I'm a young, handsome black man that's highly educated and athletic, but that's not what this type of room is. Please don't be judgmental because of who you see up here in a t-shirt. All right. I consult with cats that handle millions of dollars of portfolios. Does that mean I have to have on a suit and tie? No, you'll never see me in a suit and tie unless I'm doing an open house. And even then, I'm not wearing a tie. All right. So we talk about setups in here, and we talk about strategies, and we have a lot of fun. We're not racist. We can tell jokes. We can be in the gray area sometimes. I like that. We keep it respectful. I try not to curse as much as I can. I try to not talk too sexual. All right, because that can turn people off. But every now and then, if you got your kid on, they might hear something they might not need to hear. All right, why? Because we talk about companies like Him and Hers. We talk about those types of companies. All right, so we grown up in this joint. So I'm just setting the standard. I'm just letting y'all know. Sometimes there is no censoring. Sometimes my mouth just goes. And then my wife or somebody runs, Joe, you can't say that. I'm like, dang, my bad. My bad. I forgot where I am. All right, but this was 2022. Back to Microsoft. Then, look at here, guys. This was 2025. 3 years later, we got to the yellow brick road again. 2025. And then guess what? I showed y'all from 2012 to 2026 that everybody knew to buy Microsoft at the yellow brick road. But let me tell y'all something. What did y'all do when it got here? Joel, this is different, Joel. I respectfully disagree. Somebody disagreed with me that way. And you know what? I appreciate that. They said, Joel, I respectfully disagree with you on this one. I said, well, then short it. If you really disagree, short. Short. If you feel so strongly that Microsoft was not going to go down, then short it. Nah, well then you don't strongly disagree. You lightly disagree. Because if you strongly disagree, then you would short. I ain't see you shorting. Because you would have got your head ripped off. Because listen, I get it. I get information, guys. I love information. Don't get me wrong. I look up information more than all of y'all. I be on ChatGPT having a 3-hour conversation about Microsoft. But that's just information. Then I look at the technicals. The technicals is the fastest, quickest way to see if Wall Street's lying. Y'all lying, Wall Street. Y'all knew Microsoft was gonna pop like this, but all y'all pundits on TV talking all negative about it. And now cats are losing money that was short. So I'll say this, guys, the yellow brick road is the polygraph. It's gonna tell you if Wall Street is telling the truth or not. You can have great information that just doesn't come into play until later. For example, please do not try to educate me on the cannabis market. I got all the information y'all got. I get it. The scheduling, they're going to change it. They're going to make it a misdemeanor. I get all that. But Wall Street ain't buying it. It doesn't mean that it doesn't mean that it's not going to happen and the cannabis market is going to pop. It's just that Wall Street doesn't care right now. And they move the market. So you can have information that could be a catalyst to make stocks go up in value. But if Wall Street doesn't take the bite, then it's not going up no matter how many shares you buy. Cannabis guys, they could make cannabis legal. And if Wall Street doesn't want to buy cannabis companies, guess what? Cannabis stocks won't go up. All right. They could be the most profitable companies under $10 billion. If Wall Street doesn't want to buy it, then they're not going up. And you can always tell companies that get frustrated with Wall Street because you know what they do? They go private. Anytime you see a company go private, that means they got a bunch of stuff going on. And Wall Street is like, we don't care. We don't care. Elon said, I'm going to buy Twitter for $50 billion. Wall Street was like, it ain't worth $50 billion. Elon said, I'm taking it private. I'm taking it private. I don't need Wall Street to tell me how much my company's worth. I'm taking it private. I bet you the next time Twitter comes back on the market for us to own, I promise you it's going to be worth like $300 billion. Watch. Watch. Oh, y'all don't want it to be worth this? Let me take it private. I ain't got to deal with all of y'all rules. Just take it private. All right. So I'm still looking for questions. I don't see none. You know I'm going to keep on ranting. Okay, so I see Teresa said recap Microsoft Thursday options play. Now, do you want to look at Microsoft Thursday's day trading, or you just want to see what happened on Thursday? Because if I pulled up Microsoft's chart for Thursday, you're gonna see. Let's see. So this is what happened with Microsoft on Thursday. What day did Microsoft's earnings come out? Wednesday? So that means Thursday is when it popped, right? Thursday, I gather, was the 30th. All right. So listen, guys, this is how you day trade. If you ever want to make a whole bunch of money trading something like Microsoft. Now, guys, it's the weekend, so I'm probably not going to be able to pull up the options plays. Like, that's the only thing that sucks about super fans Saturday and Sundays. Anybody that wants to look at intraday trading plays, I can look at like next Friday's expirations and I can look at the charts, but I can't look at the chart for that day. All right. So This is how you day trade, guys. If you want to trade something like a Microsoft or an Apple, stop trying to get, I get it. I get that if you get it right, I get it, guys. I get it. If there's overnight success and Microsoft pops 13%, I get it. You can be up 1,000% in one day, 2,000%. I get it. But guess what? You can also make 300 or 400% by waking up the day of after the information comes out, and you can still make 300, 400% return. So I always said to myself, why gamble? Why gamble everything I have on an option to make 1,000% or 200 or 300 or whatever? We don't even know if it's going to even be up that much, when I can just trade it the next day. Now I know some super traders that are in the comment section right now that's like doing the math. They're like, well, hold up, Joel, if one side is up 1,000% and the other side is down, a put is down, 0%, why don't you just buy a call and a put? Well, there's people that do trade like that. All right. I try not to teach you guys that yet, unless you do like a private call with me, a private consultation, because I don't want to get into the habit of teaching you guys a whole bunch of things and then, getting in trouble for it. All right. This is not right. This is not financial advice. I just show you guys some of the things that I'm doing. So let's recap what happened with Microsoft. So Microsoft came out with news. And on the day that the next day, Microsoft exploded. Well, that night, Microsoft exploded in price. Now, where a lot of people went wrong, and we try to teach you this when we're trading. This is how the chart looked Thursday morning. So Thursday morning, I use a 5-minute chart. Let's say on Wednesday night, Microsoft comes out with news and it's like they got blowout earnings and the stock is up 10%. The next day, I know you're thinking to yourself, man, if I was day trading this, the move has already happened. And what I try to teach you guys is when I'm using and this is the Millionaire Challenge strategy. When you're using the Millionaire Challenge strategy, that I created, you have to have a couple of things on your charts. In the comment section, what is the most important indicator that you have to have, period, to do the Millionaire Challenge strategy? In the comment section, what is the number one indicator you have to have, or it won't work? There you go. It has to be the VWAP. Guys, if you don't have the VWAP, there's no need in trading. In fact, I don't think anybody should intraday trade unless they have the VWAP. Now, you don't have to use it as your entries. You have to use it as your bias. See, we could have gotten up on Thursday and Wall Street could have said, we don't like Microsoft. We liked Microsoft last night. We don't like Microsoft today. We're going to sell as much as we can today. You might have an instance where some fund, and this week, guys, we learned this week that one firm helped in bringing the price of the market down. And I kept telling you guys for years, I was trading the day that the flash crash happened. I was trading during 2008 and 2009. I've seen some of the most manipulative things in the market. I was trading once, guys, I think it was around that flash crash period, where every day the market was either up or down 800 to 1,000 points on the Dow every day for like 2 weeks. So I've seen the most crazy things on earth. A firm can come in, they may get a margin call, and they might have to sell all of their shares of the S&P. And that firm, if they got enough money, they can actually bring the market down. Like if the market was already selling off, it can help with the speed of the market selling off. And then everybody starts panicking. If you have stop losses in place, you'll see the market getting manipulated. Last week, we could see manipulation in the market. I could see it. Not only could I see it, I could feel it. Then we didn't find out until Thursday that I forgot the name of the firm. This young guy that had a firm that was worth like 45 or 50 billion had to liquidate like everything. $50 billion of liquidation in like a day or two? That's a lot. That's a lot of freaking money. And you can't just hit sell, guys, and it sells it at that price. I want you guys to think about how the market works. Let's say you wanted to sell $1 billion worth of Apple shares, right? And let's say, I don't know, let's say that was 100,000 shares. Well, if there's only 10,000 shares being, let's say every hour, I'm just throwing out numbers. Let's just say every hour, 10,000 shares are exchanged, even though there's more than that in Apple, but I get it. If there's not enough shares to support the selling of all of your shares, you have to put a price that's low enough where it captures everything from the top, and it just keeps going down until it captures as many orders as it can as the price starts to come down. All right. And you can bring the market down by doing that. And then as soon as your orders are done, the market goes back to whatever it's doing. I'm trying to explain it in a way that you guys can understand how a person or a fund can manipulate the market. So you can see the manipulation. So you use the VWAP. This whole argument is to explain to you guys how the VWAP works. It's the average, it's the volume weighted average price. It's the volume weighted average price. I'm gonna tell you guys. I'm gonna put that in the comment section too. It's the volume weighted average price. The way that I determine if I'm dealing with a day trader that's actually really good or really bad is I listen in on their lives. When they go live, I listen to what they're doing because I know what the professionals are doing. All right. The professionals are looking for an orb, which is the opening range breakout. I finally said it right. I would always call it the orb, but I would call it the outer range breakout for like years. Finally, opening range breakout. What does the opening range breakout means? That means, guys, if you use the ATR, which a lot of you guys don't do either, I don't even see some of the best day traders out there using ATR. So the first thing I look for is I look for the average true range, ATR, average true range. I'm going to write that down too for you guys to go into your little GPTs and learn something today. Average is called ATR. Stands for average true range. Now, what is the average true range? It's the range of that stock on average for the last 14 days if you're using Wilder. And it includes the volatility. That means this week Apple may move $6, but a month ago it might have moved $3 every day. When volatility increases, the ATR tells you what the average move is, including the volatility of what's happening, in the last 14 days. Very cool, because a lot of you guys just buy something and just be like, I'm just going to get in it until it goes up, or I'm going to get in it until it goes down, which is fine too. Another thing that you guys need to learn about day trading or intraday trading before we go on is that the market is split up into 4 different day trading time frames. The only people that know this are real day traders. Please stop getting in the market at 9:30, put on an hour chart, and try to trade till 4 o'clock. like, seriously, stop doing it. The market trends for an hour max. So if you're able to get into a trade, you should be thinking, when people say, Joel, how do I know when to get out? Well, you either should be trading the 9:30 to 10:30 period, the 10:30 to 12 period, this is Eastern Standard Time, the 12 to 2 period, or the 2 to 4. The best traders that you ever see, you're going to see them pick which time frames they're going to get on. You rarely see somebody sitting there trading from 9:30 to 4. The only people that trade from 9:30 to 4 are new traders that have no idea that there's 4 trading sessions. And they end up messing up their eyes like I did, trying to look for every move from 9:30 to 4. 9:30 to 10:30. There's usually a 10:30 reversal, 10:30 to 12, 12 to 2, which is the worst period to trade in my opinion. But my West Coast people love it because that's when they're waking up. And then you're 2 to 4. All right. The orb, which we talk about, is the opening range breakout. Why do they do that? Because if a stock, let's say Apple has an $8 range. Let's look at Microsoft, for example. Microsoft has an ATR of of 16 points. That means it moves $16 a day on average. Now, on days, this is very important too. This is one little key little thing that a lot of you guys don't do. On any given average day, now remember, earnings only comes out 4 times a year. Earnings comes out 4 times a year. There's 4 days, guys, out of the year that you never use the ATR. And it's the day after their earnings. I wouldn't even do it the day before. Throw the ATR in the trash a day before or after earnings, because now fundamentals is the only thing that's going to push this stock. Anything outside of the 4 times that they have their earnings, you can try to trade any stock technically. Technically, the ATR is going to be, it's going to stick to it, within 80% of whatever that value is. That means if I look for an ATR and I see that Microsoft moves 16 points, it can probably move anywhere from 12 to 20 on a regular day. So that means 12 points minimum, you're going to see Microsoft move, like, period. And that means from the lows to the highs, or the highs to the lows, you're going to see a movement of 12 points. On the day after earnings, throw it out the window. It's not going to work because the fundamentals are going to kick in. On fundamental days, the stock can go up 30, 40, 50 points if it wants to. That's why we trade it. So when you're looking for the Millionaire Challenge trade, guys, you're looking for a day where the technicals don't matter and it's all fundamentals. Now, it can be earnings. It can be news related stuff. You can look up and they can say Microsoft is hiring Bill Gates again for Microsoft. And everybody and their mama gonna trade Microsoft that day. We don't know if it's gonna be up or down, but the technicals will not matter that day. You can wake up one day and it can say Microsoft is involved in a scandal where the computers blow up after 3 years. And then you're going to see the stock tanking. Guess what, guys? The ATR does not matter that day. The fundamentals kick in. You use the VWAP. You use the VWAP to know what direction that momentum is going, or it gives you an idea at the time what direction you should be going in. So when you woke up that morning, we saw that Microsoft, even though it was already up big overnight, it looks like there's still gonna be more buying. Throw the ATR out the window. But what professional traders do is they say, all right, if I'm gonna buy Microsoft on a fundamental day where everybody's buying it, where is the best place to buy it, guys? At the VWAP. Everybody knows this, that day trades, like everybody. So if you don't know this, write it down. If you're humble enough, you'll start using it instead of saying, no, I'm going to stick to what I've been using my whole life. Great, do it. Just throw it on your chart. Because if you were doing what the professionals were doing, you knew exactly when to get into Microsoft. That's not a coincidence, guys. The reason why you didn't know to get in right there is because you're not a professional trader. You thought you were, but you're not. But we're going to get you there. We're going to get you there. You also could have done this. If you were thinking about buying it, you could have said, ooh, let me see if it can come down to the, y'all know if you see any, listen guys, if you hear anybody trash, if you hear anybody trash Fibonacci retracements, you got to be skeptical about how they trade. It's not the end all be all. It's just that, guys, stocks move in a stair-stepping pattern. How can you just say Fibonacci's don't work when the stock market moves? Look at the chart. Stocks move in a stair-stepping pattern. They stair-step down, they stair-step up. The only way you're going to be able to catch those stair steps is if you buy it at the 25 or 50% area. Literally, if I hear people get skeptical about this, I say they don't trade. Either they don't trade or they're missing the fundamental movements of stocks. And it sucks that they don't. It's just like when I go and play golf and somebody says, swing with your arms as fast as you can. And I'm like, the golf swing is not even about your arms. It's about your body. So I get real skeptical about how they play. I'm like, you move your arms as fast as you can? Like, it's the same thing when I hear people try to teach swimming. Swimming, your arms do work. But your arms are not the biggest muscles that you have. But a bunch of you guys, you can't swim today because the first time you get in the water, you try to keep your little 250-pound body up with your arms. You're not going to be able to keep that 250-pound body up with your little arms. You're going to need the bigger muscles. Same thing with the golf swing. What's stronger, your quads or your biceps? You see, you don't ever see no skinny leg baseball player. You never see no skinny leg baseball player hit 50 home runs. Their lower bodies are usually diesel. Same thing. You guys don't understand the fundamentals of the freaking market. I'm trying to get you guys there, right? Doesn't mean that I'm better than you. It just means that I'm better than you. It doesn't mean that I'm a better trader than y'all. It just means that I'm just better. It doesn't mean that I make the highest percentage. You guys beat me in percentages all day, every day. Now, if it was a contest, y'all know me. I come back from a day where, you know, I'm a S talker. Like, don't challenge me, because I have crushed many of traders. Crushed them. I've crushed businesses. Because I'm like, why you want to argue with me? I'm the dude that plays spades and can slap the card so hard that I leave a crack in that mug. That's me. I'm that dude. Anyway, let's get back to the VWAP. So the VWAP in Microsoft, you could have bought it at the 25 or the 50% area, and look at what happened. It went all the way up in price. And where did we end at the end of the day, guys? We ended at the, guess where, the VWAP. Everybody knew this. So listen, you didn't even have to be long. That's what's so crazy. Let's go through the time frame. Because I know a bunch of you guys are like, Joel, you don't know what you're talking about. I'm like, okay. This is what happened at 9:30. Now, I've been preaching the same time frames for like 10 years. This is 9:30. Joel, I just don't believe it. I just put on a trade at 9:30, then I just come at 4 o'clock and this is what happened. At 9:30, Microsoft went up in value. You could only really make money for the first 20 minutes. And then y'all know what it did? It didn't do anything until about 10:30. It stair-stepped all the way down to the VWAP. When it got to the VWAP, guys, it wasn't 10:30. It was 11 o'clock. Around 11 o'clock, Microsoft started to go up in value again. How long did it go up in value, guys? It went up almost in a straight line. Guess how long, guys? Just take a guess. 1 hour. Y'all better learn these patterns. Then it went sideways, guys. Guess when? From 12 o'clock. I promise y'all, this is what this is at. From 12 o'clock. From 12 o'clock to 2 o'clock, the market Microsoft ain't do nothing. That's when a bunch of you 9-to-5ers want to trade the market. Y'all want to come in at lunchtime and trade, wondering why you can't make no money. And right around 2:25, guys, what y'all think happened? What y'all think happened right around 2:25? You got it. It started trending in the opposite direction for an hour into the close. The same patterns we talk about every freaking day. This could have been the opposite. Somebody's going to get this wrong and think, Joel said that the market goes up for an hour, then it comes down, then it goes up. No, I said it trends. It trends for an hour. Then everybody go in a huddle and they say, all right, guys, what's the play? We gonna go in this direction for an hour. Cool. Then it goes into I don't know what direction for an hour. Then at 12 o'clock, everybody's like, woo, we tired. Let's go to lunch. And then we gonna reconvene at 2 o'clock. And we gonna talk about what direction we wanna go in. I gotta make a couple of calls to figure out if this is gonna be the right direction or not. So everybody, we gonna reconvene at 2 o'clock. We don't know what direction we going, but we know we gonna push it in one of those directions. Then 2 o'clock comes and they're like, yo, Mike said we need to get out of these trades. All right, y'all ready? The play is let's sell. They sell for an hour and a half. Next day, guys, we're going to reconvene at 8:30 in the morning before the 9:30 people get involved. And what we're going to do is we're going to push the market up at 9:30 and then all the suckers are going to buy at 9:30. This is what happens every day. You start seeing the market move at 8:30. Y'all think y'all getting in early because it's 9:30. They ain't doing nothing but selling to you. And this is what happened from 8:30 to 9:30. Microsoft went down in value. 8:30 to 9:30, it went down in value, then it went up. Now, if you were using the Millionaire Challenge, I can't do it But if you were to go into the options market, you can also cheat. You heard what I just said? You could have gone into the options market and started cheating. You could have gone into the options market and cheated. How do you cheat? You go in there and you look at what the support and resistance lines are for the day. I bet you your teacher never taught you that. What? Wait, whoa. What'd you say? I said instead of you drawing your own support and resistance lines, why don't you draw the support and the resistance lines that Wall Street is drawing? But see, they're not drawing it. They're not drawing it. See, they know that y'all don't know how to look up options. They know this. They're like, maybe 5% of people are actually looking at it. We got to get on this guy named Joel because he's teaching thousands of people how to do this secret that we've known for years. If I want to trade something, I never draw my support and resistance lines. Don't nobody give a dang about your support or your resistance lines. Nobody cares. Wall Street don't care about that line on your chart. So you go into the options market and you see where all the options for the day are being bought, especially the 0-day options. The 0-day options are so accurate with what the highs are going to be of the day and the lows of the day that I'm surprised they're still allowing it. So while you guys are trying to gamble on where you think it can go to, we're in there like, all right, guys, all the puts that are being bought on Microsoft are at 203. I'm just throwing a number out. The highest call option is being bought at this particular strike. So now I got a range to trade in. If you ever see a put that has the most strikes, like let's say we open up Microsoft today, and the highest put was at, let's say what price is it at? It's at I'm gonna give you an example. Let's say we were day trading and we saw that the largest put, now this wouldn't have happened because it was up in price, but let's just say it was a normal day. Because remember, technicals don't matter on a fundamental day. Let's just say we were trading Microsoft and they didn't have their earnings. And you looked up and you saw a put option, and the most puts that are being bought that day are at the 445 strike. Let's say the most puts you see is at the 445 strike. What do y'all think's about to happen? I want you guys to think about this psychologically. Let's say we opened at 445. Let's say Microsoft opened. That means at 9:30. Let's say we opened at $445 after coming down about $5. So let's say this is like 9:40. We're at 450, and all the puts you see are being bought at the 445 strike. If all the puts you see on the right side is being fulfilled at this 445 strike, guys, that means that's a floor. It's probably not going lower. So if you look up and you see a bunch of calls being bought at like 455, and we're at 445, and that's the most puts you see on the put side, that's like a no-brainer trade. It's telling you it's not going lower. Statistically, I'm not saying it happens all the time. I'm just saying once that strike is fulfilled, it usually reverses. So even if you look at all the options that's being bought and it's at the 455 strike and we go all the way to 455, you probably want to get out of that trade. Another mistake that a lot of you guys make is you'll see everybody buying the 450 strike. We'll be at like 455. You see calls. The most calls are at the 450 strike. We at 455, and y'all start piling in. The most calls were bought at 450 is probably coming back down. Sometimes the call strikes can act like a put, especially if you're higher than what everybody else is buying. And a lot of you guys don't know this because you don't look at the volume. So I'm trying to teach you guys what the professionals are doing. The professionals are coming in, and before they even hit a buy or sell button, they looking at what the support and resistance areas are, not because of what they draw. That's what old traders are doing. Traders from 2000 to 2010 that's teaching y'all stuff. They teaching y'all how to draw the little support and resistance. Ain't nobody looking at that crap no more. They're looking at the VWAP and if we break out. And I think I always have been ahead of everyone. Like I'm an Aquarian, so I've always been ahead of the crowd. It's gonna catch on about the average true range and unusual options activity. Now I learned about unusual options activity from the Nigerian brothers. Go into your chat GPT and look them up. They taught me unusual options activity on TV. I was watching CNBC one day, and they literally was talking about what I'm talking about right now. And I think they got so frustrated because they thought that everybody was going to be like, oh my God, this is the segment everybody's been waiting for. The problem is they were too far ahead of everyone. This was before like COVID. So no one even knew what options were until COVID. COVID made it really, really popular. And now that you don't have the $25,000 that you need to day trade to get in and out of the market, you're going to see a bunch of futures traders come on over to the option side. Because they're like, hold up, Joel, I can get in and out of an option all day long and not get labeled as a pattern day trader. And I'm like, yeah, that just went into effect in mid-June. And a lot of you cats don't know this. You don't need 25 grand no more. Now, again, this is not financial advice. Please do your due diligence. They are setting up the market for everyone to learn how to trade. This is what we've been dreaming about. This is what I've been dreaming about for years. Now, it sucks because we got a little bit of change now. Like, where was this when I only had $500 or $1,000 and I had to build my accounts to 25 or 30? Now you don't need it. You can open up $1,000 account, get in and out the market all day long. Anyway. So, questions. Anybody confused about anything we talked about? Anybody don't believe it? Don't believe the hype? Say it. I don't care. You ain't gonna change the way I trade. Like, this is what we talk about in the group chat all day, every day. You got validation from people from the group. That's another thing, guys. If you don't have people validating what's actually happening in the group chat, and I'm not paying these cats to do this. When you got people that are like, he's FOS, don't listen, then great. Then you can run out the room. The group chat is filled with other educated people just like myself. And all we do all day long is look for, and look, I've been playing golf lately. I ain't been calling like no trades. The group chat's been running on its own. That's why I created it. I wanted to make sure that when you guys come here, you get educated. You ask the questions that you need to ask. I want you to develop your own system and your own strategy. No two golfers should ever look the same. Guys, I used to teach swimming. No two swimmers look the same. Some swimmers are leg heavy. Some are upper body heavy. Some people swim with their elbows straight. Some people move with their elbows, bent. There is no one way to do anything. There's a fundamental way to teach swimming, but everybody's built different. And if you try to make everybody swim the same way, then you're not going to be a good coach. just like in basketball, right? Everybody's got a different body type. And I know I always go back to athletics, but athletics and trading are very, very similar. You got to understand the fundamentals, but I want you to develop your own game. But if you don't understand simple, basic stuff like support, resistance, options, volume levels, ATR, VWAP, orb, what charts to actually day trade off of. Some of you guys are day trading, don't even know the definition of day trading. Like if you had to go to somebody right now and say, explain what day trading is in one sentence, you couldn't do it. What's day trading? What's swing trading? What's investing? Right? What is the definition of an investment? Anything that you buy and you hold for longer than 12 months. I don't care if you put $1 million into Apple tomorrow and then sell it in 3 months. Just because it was $1 million does not make it an investment. That is a trade. Anything that you buy and you sell within a 12-month period is a trade. And if you're trading and you're not using charts, you're probably going to lose. And I'm not even saying this to try to be a negative Nancy. It's just, it is what it is. Traders use the technicals and the fundamentals. Everybody knows this. It's like flipping houses. If you can't keep the cost down on the materials that you're flipping that house with, chances are you're probably not going to be profitable. If you're playing top dollar all the time, you're not going to make a profit. Okay? Same thing with trading. You're not going to consistently make money. Now, that doesn't mean that you can't invest. Invest is where you become wealthy. Every single one of us can buy something and hold it for 12 months and not ever even have to know what a chart is. All you need to know is, how do I put money in my brokerage account and hit the buy button and own it? We all can do that. But when it comes to trading, that's a different skill set. Okay. And then when it comes to intraday trading, that's an even different skill set. Now, what I try to do is I try to teach you guys the same way to look at the market, and all you're going to do is look at it either on a longer time frame or a shorter time frame. So before I get to your stocks, because it's 11, I'm going to get out of here at 12 though. But we're going to talk about my BTG system. All right. BTG is bias trigger gold. I created this. It's called BTG. All right. BTG. No, I'm not going to say, bitch, that's good. I'm not going to say the B word today. It stands for bias trigger gold. Somebody said, does that mean bitch, that's good? Because bitch, that's good. No, it stands for bias trigger gold. All right. Bias trigger gold. There you go. Bias guys, don't come in here talking about bitch, that's good. It's bias trigger gold. We're trying to keep it respectful. They're kids on this live. It's bias trigger gold. So every chart, you got to have a bias. Moving averages are your bias. That's the easiest one to get out the way. That's the easiest one. Bias. Bias. All right, bias. When I pulled up this VWAP, the bias was up. Guys, what is the bias on this chart for you guys that want to buy Nike? What is the bias? Please tell me, what is the bias of this chart, people? In the comment section. We're going to get the B out. Down. Down. All right. So nobody should be buying Nike as an investment. I am not talking to my traders. Investors. If you don't stay away from this, I'm going to come through this chat. Please. Guys, stop coming to me asking me about this stock. What is the freaking bias? These are the two main stocks y'all keep coming to me for the last 3 years. And I keep telling you the same thing. Not only is it below, now it can be below. Now that's a good thing. It can be below the 200, guys. Listen, it can be below the 200. It's just that the 200 week cannot be angled down. When it's angled down, you do not want to be around. Guys, this is the easiest stay away from. It's like the biggest red flag you can find. So every chart should have a bias. So you can immediately know. Now, it doesn't mean that you can't remember, stocks stair step up, stair step down. That means bulls make money, bears make money, pigs get slaughtered, right? But look at the biggest moves. The biggest moves are to the downside. The smaller moves are to the upside. So you might get a nice little rip for, this looked like it ripped for about a year. But then what did it do, guys? Back to downtrend. I don't have the patience to sit in a stock like this for 3 or 4 years. I just don't. Here's a stock that I just recently got out of. Now, here's what's crazy. Why did I get out of this? It was underneath the yellow brick road. The answer is I shouldn't have. Unless it breaks a trend. So when I was in Wingstop, guys, I tried to hold on until we broke this trend right here. When we broke this trend right here, I had to get my butt out. Yes, the yellow brick road was angled up, and it still says that Wingstop is still a good investment. It just says you need to be cautious now that we're underneath it and there's no buying. There's no buying, Joel. This thing is going down. So I had to get out. So I got out in the 200 range. No, that's not true. I got out in the 80 range. And now we're sitting at like 130. So I saved myself a lot of money. Okay. Here's another one that you guys keep buying. Now, this might be the turnaround. Disney. The bias, guys, from 2022 has been down. Now, if you want to sit in this terrible company for 4 years until it turns around, be my guest. I ain't doing it. I ain't doing it. If you're going to do it, though, we are at a support level. What sucks is this is what y'all be learning in these new classes. Ooh, Joel. Guys, what is 7? I know what double is. What's 7? 1, 2, 3, 4, 5, 6. What's 7? I know there's double and triple and quadruple. I don't know what's after quadruple. What's after quadruple? Well, this has a quadruple, what? Just sept? So what's septuplet? Quintuple. So quintuple is 5. Septuplet is 6. What's 7? I ain't never heard of 7, but here's a pattern y'all need to look up. Septuplet? Guys, we got a septuplet bottom. I know y'all ain't heard of that yet. You learn this in class. You guys, you got to look for something that bottoms out 7 times. That lets you know. 5, 5, 6, 7. This mug bottomed 7 times. Guys, I went on a live and I learned about a septuplet trade. Have you ever heard of a stock that bottomed 7 times? We looking for the 8th one. We gonna call it the octopus trade. Please stop looking for octopus trades. It's probably going lower. I don't have time to be sitting in something that bottoms 8 times. Y'all like it. It's on sale. How? How is it on sale? It's been at the same price for 3 years. AI, you got stocks like SanDisk up 4,000% in 1 year. You got stocks like Micron up 1,000%. 1,000% in 1 year. You got companies like Nvidia, that's now the 2nd largest company on the planet. If you bought it, I think in 2000 and at what, the April bottoms or something, it went up 800%. And you want to buy this crap? You don't want to make money. You don't. I'm safe, Joel. I know it's not going to go lower than, what price is that? It's not going to go lower than 96. Yeah, and it ain't going to go higher than 97. I feel comfortable with that. The bottom's 96, the top's 97. You just want to be in. I hope the dividend is high enough. Does Disney even have a dividend? Let me check. Does Disney even offer a dividend? Let me check. Disney. Does Disney offer a dividend? A dividend is when the company pays you guys to own the stock. So every quarter, let's say the yield is 4%. That means every quarter, depending on how much you own of Disney, you'll get 1% of what. Let's say you put $10,000 in Disney and it has a 4% dividend. Dividends are paid out 4 times a year. Well, that 4%, you'll get 1% the first quarter. So if you put up $10,000, 10% is 1,000, 1% is 100. For every $10,000, you'll get paid $100 every 3 months. Disney does have a dividend. It's 1.5%. I'm cool on that. I just get my 1% a year and I'm good. I'm like, you could have put that in a CD and had guaranteed money when the CDs were like 3-4%. Well, I'm going to put it in a stock when I can get guaranteed 3-4% if I put it in a CD. Just put it in a CD. What stock is compact disc players, Joel? No, CDs. CDs. All right. Hold on. Sorry about that. I'm trying to get back to y'all. All right. So that's Disney. Let me see. Let me see if there's any other questions. All right, so we have been going. I have been missing a lot of questions. So if you did have a question, let me get those questions now. It's 11:20. Any questions that you guys have, put it in the comment section now. Any stocks you want to look at, put it in the comment section now. I'm scrolling back, but it's just too much scrolling. If I missed your question, my bad. Y'all know me, especially when I just had my morning coffee. All right, so Medici wants to look at DPST. DPST. Let's break it down. DPST. Now, look, this is an interesting chart, right? Let's say you want to go against what you see in the charts. We all know that the bias of this bad boy, which in all honesty, guys, when it comes to triple ETFs or like this is called the Direxion Daily Regional Banks Bull 3X Shares ETF. Your moving averages are going to work a little bit different when they come to this. Now, if you look at the moving average, you see that once it started to turn down, like everybody knew to literally sell at the 200 week. Like y'all see that, right? So I would say that the moving averages are going to work the best on pure stock plays, pure futures plays, pure Forex or cryptocurrency. When you start getting into those triple ETFs, the numbers are going to be a little bit, they're not going to be as accurate. But what I do see on this chart is that it is holding this trend line. So even though the 200 week moving average is angled down, you see it holding a support level that goes all the way back to 2023. So this is when the technicals and the fundamentals are starting to merge. Fundamentally and technically, this has been a terrible stock for 4 years. Well, really for 2 years. And then for the last 3 years, so it sold off really hard in 2022 and 2023, and it's taking a long time to recover. All right, this is DPST. So I don't really trade the triple ETFs. I take that back. I'll trade them, like intraday trade them, but I won't swing trade or invest in the ETFs. All right. But it looks pretty good. It's breaking. It's sitting at support. Even though the yellow brick road is angled down, it's now gotten through the yellow brick road. And if you want to take a shot at it, be my guest. This is a very good entry. If you were using the What Would Joel Do method, you'll wait for it to go down, break the trend. So once it broke the trend right here, guys, you wait until it starts to go green. When it goes green, bam, that's where I would have been in. Okay, why wouldn't I have gotten in here? Because the candles are red. I have a trending indicator on my chart called the TTM trend. It's literally called the TTM trend. It color codes your chart. That's why my charts look a lot more cleaner than the charts that you guys are using. You can use Heikin Aiki candles, or you can use the TTM trend. All right. Wesley says your exit plan when the market tells you it's going bearish. What to sell and how much? Now, that's a very good question. Wesley said, let's say you're in a stock like Micron. I'm just saying Micron, right? Let's say you were in this move all the way to the upside. You're like, oh my God, I bought this Joel. Joel, I bought 2 shares for $300 way down here. And now those shares are worth $1,255. How do I know when to get out? Very easy. The market's going to tell you when to get out. What do you guys notice about this chart? What is the one thing that you notice about this chart? With your own eyes. I'm not even going to tell you. What do you notice about this chart? This is Micron. In the comment section, let me know. What do you notice about this chart? There's a couple of things that comes out, right? It broke the trend, and first of all, it was parabolic. A lot of you guys, when you're in parabolic stocks, y'all don't know that they're parabolic. Anything. All right, you know what? I'm not even going to give this number. What is the degree that we look for, guys, when a stock starts to go up in price? Like if you were to put a protractor, y'all remember the protractor that we learned in geometry? When that protractor shows you a number When does a stock go parabolic? It has to be higher than what degree? What degree does it have to be higher than to be parabolic? The answer is 45. Anytime a stock starts to go parabolic, guys, that means it took Viagra and Cialis at the same time. You know you ain't supposed to do that. Mama, what's Viagra? I saw it on Daddy's counter. Anytime it goes higher than 45 degrees, it's parabolic. That means, what's the next thing that you guys notice? It went higher than 45 degrees, and then guess what it did, guys? It broke this trend line. All you had to do is, when you're in something that's parabolic, guys, do not get out. You get out when Wall Street says get out. You get out when people start buying. And I know this as a human, you want every dollar that you possibly can get. You're not going to want to, you're thinking as an investor or a trader, you're thinking, but in order for it to go down, Joel, that means I'm going to lose out on some of the money that I already have in it. And I'm like, yeah, that's true, except you don't know how high it's going to go. See, you thought it was think about it, guys. When you guys bought Micron in the $300 range, you didn't think it was gonna go to $500 in 2 months. In fact, you didn't think it was going to $350 in 3 months. Some of you guys are like, I did, Joel, because I can see the future. Whatever. I'm not talking to my super traders that have an hourglass. I'm talking to the people that if you were in this thing and it started to go parabolic, you sit in that bad boy until it breaks this trend. Now, when it broke this trend, it broke the trend, guys, at $990. That was your cue to get your butt out or sell half. The rule of thumb is this. If you double, let's say you bought something for $300. Let's say you bought 2 shares. You bought $600 worth of Micron. It goes from 300 to 600. All right, let's just say you bought $300 worth of Micron. And it goes to 600. Your initial investment was $300. Once you double your investment, the rule of thumb, like if I was teaching a class, if you were teaching a class and you were learning from somebody like a Kramer, or if you were learning from any investor that's actually legitimate, they're going to say the first, you always have your own personal goal, right? Everybody has their own personal goal. But if I had to talk to all of my investors that are out there, and I had to say there's one thing that everyone has to do, it's going to be to take out what you initially invested and then let the rest run until it breaks a trend. So some people would have bought $300 worth of Micron. Once it got to 600, they would have taken their 300 out and let the other 300 run. And then that $300, remember, it would have gone to 150. So it would have been half. That 150 would have run all the way to about $600. Now think about that. You took out 300, your initial investment, and it still ran 600 extra dollars on top of your 300 that you already took out. Then it went to 600. Then it broke that trend and it was at 990. Remember, you had half of it. So you would have ended up walking away with $450 plus the $300 that you initially put in. That means you would have had, now you got $750 to invest, and then you can go and try to run it again. You put that $750 into something. If it gets to about $1,500, you take your $750 out. You let it go parabolic. If it does, if it breaks that trend, you're the CEO of your company. You can get out. Now, what I like to do, guys, is even though it breaks a trend, I don't get out. I wait for 3 candles. So my butt wouldn't have gotten out until 9:19. So, once it broke this trend, I would have waited 1, 2, 3 candles, because 3 candles would have confirmed that maybe it's about to turn around and that this trend is over. Every now and then you'll get a fake out. You'll get a fake out where it will break the trend and then it'll break right back up, and we'll get into what we call a short squeeze. So don't just get out, in my opinion, off of the first candle. All right. Cool. Great question, Wesley. But yeah, it depends on what your strategy is. You said don't forget the honey. That's hilarious. All right. Any other questions? Got 30 minutes for questions. That's Micron. Anybody that's in Micron right now, you need to be worried. If you're in Micron right now, you need to be worried. I'm completely out of Micron. I tried it, guys. It didn't go up. I'm out. I didn't catch this move. I tried to catch it right here. Guys, I tried to catch Micron right here. I'm going to tell you where I bought it. Do y'all remember? I bought Micron, I believe I bought Micron in this. Oh, I didn't buy it in that area. Heck no. I know I didn't buy it in the 700. I should have. My first investment in Micron should have been here. Because if I had just waited until it got to 784, I would still be in it right now. But nah, I got it I think I got it way up here. I think I got it in the $1,000 range. I don't know how that happened. I think I bought it on, let me see what I did. What did your boy do? Oh, I think I bought it here. This is what I did. I put a Fibonacci on a shorter time frame. That's what I did. I bought Micron. Oh yeah, I bought Micron right here in the 1053 range. That's it. I did the same strategy on a shorter time frame. But then once it lost and it kept going down, guys, I got out of it. Okay? If I had put it on a longer time frame, the longer your Fibonacci retracement, the stronger it is. That was a shorter one. If I had gone down to, if I had used the lows of April, if I had used the lows of, this was March 2026 right here. This is March 2000, wait, was that, did I just say 2026? This is March 2026 in Micron. The lows in Micron at the time was $300. If I had used these lows with my Fibonacci tool, your boy should have been in right now. But I jumped the gun. I should have been in right here at the 50% area where everybody else looks like they're taking a shot at it as well. That was actually the more realistic play, guys. This was the more realistic play. I should have bought Micron for $780. I got in $300 too high. But remember, when I bought Micron, I didn't have a full position and I just gave up on it. I just said, bump it. Whatever. I knew that it was parabolic, but I should have bought it in the 778 range, which is right here. I would have had a better entry. And now we're sitting at 823. So I would have been up $40, which in all honesty, that's not really that much for a stock like this that moves. I would only be up about, let's see. I would only be up about 5%. So I don't feel too bad. It looks like Micron might go back down, guys, and try to get down to this blue area. So if you are investing and Micron. There's nothing wrong with taking a shot right here. Especially if you didn't buy all of your shares. If you love Micron, you should be dollar cost averaging it. If you loved it at 1,000, you should be loving it at 800. I had only bought like a share or two. I didn't have a full position. So I got rid of that small position. I got rid of my SanDisk and my Micron. I got rid of all of them this week because it looked like the AI trade was over until we got wind and we got word that there was a bunch of hedge funds out there that had to liquidate their portfolios this week. They got margin calls. And it forced the market for the last 2 weeks to go down. Well, it helped. I'm not going to say it was the full reason. The market probably already wanted to sell off a little bit, but then it caught fire when they started liquidating their portfolios. And when you're liquidating a portfolio with 45 billion in it, you're going to move the market. You're a whale. That is the definition of a whale. Okay? They didn't sell a couple of shares, guys. Liquidated the whole position, the whole portfolio. That is crazy. And I forgot about this, guys. I totally forgot about this. They liquidated the position, guys, and they had leverage that was like 4-to-1. So I know the firm was already worth like 45 billion. They probably liquidated like 180 bit. Well, I might be wrong. If I'm wrong, correct me if I'm wrong in the comment section. But that means they liquidated like $180 billion. That is, you can move the world with $180 billion. Like seriously. But that's why you saw a huge jump the day after they were totally out, and they came out with the news. They were like, all right, guys, this company over here had to liquidate their positions. They're completely out, 0 shares. And this other hedge fund came in and bought like a lot of their, and I'm like, well, why couldn't y'all just do it behind closed doors? Like, why couldn't y'all just sign a sheet of paper, sign some shares over, and then it wouldn't have affected the market? Like, why did it have to happen in the market? I still don't get that one. Sign it over. So yeah. Wesley asked another question. Oh, I bought in the 900 area? All right, cool. Yeah, because we were in the group chat. I was telling a lot of people where I was buying Micron at the time because I'm pretty transparent when I'm buying things. I try not to. I will buy and then tell you guys later. But it might be an hour after I buy. Sometimes it might be a day, but at least I tell you. And then I tell you when I get out. At least I try. All right, let's look at CoreWeave real quick. CoreWeave. CoreWeave is the company that was kicking my butt. Last week, if you came in live and you saw me and I had a bad attitude, it was because this company, this was one of their main holdings. So when they had to liquidate it, they were selling a bunch of CoreWeave. Now, my Corning was down 20% in one day, and I think CoreWeave was down somewhere near 15 or 20% either the day before or the day after also. So I was not a happy guy this week. What's funny is that I made all my money back this week that I lost. Not that I lost, I was down. So I started the week off like heavily down. So I was hot, didn't even want to do no lives. And then that huge move in the market on Thursday and Friday, they were pretty much all the stocks that I was in. The same companies that this firm was in because they were heavily invested in the AI data center companies. They were long those companies and short the software companies. So imagine they were wrong both ways. So when the market exploded in value, and the software companies were up, the software companies is what put them in trouble. The AI stocks started to fall, and then they were short The software companies, and everybody knows the software companies were up big in the last 2 weeks. Took that broker, that hedge fund completely out. If it's a hedge fund. But CoreWeave, as an investment, the 200-day is now angled down because for the past couple of weeks, man, it has been getting hit. So short term, you should have been short in CoreWeave. In fact, CoreWeave started to go down in value, guys, March of this year. So if you're a short-term swing trader, you should have been short CoreWeave because the technical started saying, uh-oh, SpaghettiOs, something's happening. Now, that doesn't mean that the investing strategy is not in place, because investing-wise, it doesn't have a yellow brick road yet because CoreWeave has not been traded on the New York Stock Exchange for more than 4 years, so it's not going to have a yellow brick road. So you got to put in, you got to look at the next best thing, which is the 200-day moving average. Put the 200-day moving average and then add your support level. And if you notice, we broke the support. Remember what I told you guys? It takes 3 days. It takes 3 days for, and I told you guys on this live, I said, guys, I'm going to be real concerned if we spend 3 days underneath this line. Well, guys, we didn't. We spent 2 days. We spent 2 days. The third day, we got right back above the support area. That means CoreWeave is still intact. If we break this support level and we stay underneath this line for 3 days with that 200-day angled down, there might be a problem technically for CoreWeave, which is gonna also go along with the fundamental theory right now. The theory now is that spending has gotten too much and that these companies are not going to be able to make the money from all of this AI data center spending. Microsoft came out last week and said the devil is a lie, and said with all this spending that we're putting into AI, our margins have actually increased. That means for every dollar we spend, we're actually making money. And Wall Street was like, what? We thought y'all were losing money. They were like, no. So now if these hyperscalers really start to make money off of these investments, oh, you're about to see the market explode in price, because that's what's been bringing this whole AI data center thing down, because everybody keeps calling it a bubble. And in a bubble, stocks go up in price even though they're not making money. Well, Microsoft was like, we making money. I don't know what you're talking about. Companies like Snowflake was like, we're a data company, guys, and you guys ain't looking at the right data, and this data is going up. Micron and SanDisk came out and said, yo, I know y'all think that because our stocks went up 4,000 and 1,000% and that we are parabolic, I know y'all think that the spending is slowing. It's actually increasing. And Wall Street was in denial and didn't want to look at these numbers. And they were like, well, we still need some more information. You couldn't get it from Apple because Apple's not involved in anything like that. So you have to wait for the hyperscalers to come out. You can't look at what Meta's doing because Meta's changing its whole model. So you needed to look at software. You needed something like a Microsoft to really get the real truth. And Microsoft kind of set the number. It set the record straight. Well, it was one of the first companies to set the record straight. Now they're waiting to see what the other companies are going to say. All right. But now Wall Street is in a pickle because they're like, oh, shoot, we were wrong. And then now they're hearing that the market was really only falling as hard as it was this week because of 2 or 3 firms. Now Wall Street's like, dang, we got it wrong on that end, too. We got it wrong because we thought that it was going down because everybody decided to sell. So, we are in an inflection point right now. You're going to see a lot of these stocks sitting at their 100-day moving average. The 100-day moving average is kind of like the 200-day is what investors and traders look for a reversal. The 100-day is kind of like we go into the 200, guys, if we break this 100. All week long, everybody turned to the 100 because when everybody's confused, they say, well, at least where are we in relation to the 100-day? You're going to see everybody sitting at this purple line. Like no matter what company I pull up, a lot of these companies are sitting at or close or near, well, except for Apple. Even though Apple is about to sell off, you see Apple reversed early off of this 100-day moving average. Remember bias? Bias is up. People are going to take a chance at the moving averages. All right. All right, let's look at Palantir. All right, we got Palantir earnings. Now, Palantir is one of the few companies that has not taken part in this move to the upside. Look at what it's doing at the 100-day moving average. This is not good. This should have told you. This is why I haven't been talking about Palantir. Y'all realize that I was on Palantir when Palantir was making money. I talked about Palantir on my own every other live. But once the technicals started to go downhill, you rarely hear me talking about Palantir. In fact, guys, I cut like 80% of my position when Palantir was close to its highs. The reason why I cut 80% of my position was because of this. Palantir went parabolic. Y'all see this? Remember what we said? When a stock starts to go up higher than 45 degrees, you have to get out when Wall Street says get out. I got out of Palantir way up here, guys, in the 180 range. You know how long I stayed in it? Y'all know where I got in Palantir? I got into Palantir, what? I was up. Oh my God, what? So we're up. Hold up. My I forgot what my let's see. Hold on. Let me take a picture of this real quick. Copy. All right, is Palantir even on this screen? There it goes. So I'm up 83%. Let's just say 100% from where Palantir is right now. All right, so that means if I'm up close to 100% after all of my dollar cost averaging, that means that I was able to buy Palantir in the $60 range. That means I was in Palantir, guys, way down here in the 60 to 70 range. You know why I bought it in the 60 to 70 range? What do you guys notice? What do you guys notice? I can literally go back and look at the price of something and I can tell you how I was able to get in using my methods. Look at this. Look at that beautiful entry. I was able to get into Palantir in the 60 to 70 range, and I rode that bad boy up all the way to 200. That means I got in at 66. I rode it all the way to 200, and I didn't get out until Wall Street said, Joel, get your butt out of Palantir. How did I know to get out? 3 candles breaking the trend. That puts me right around 170 when I got out. So Joel capitalized on a full position. I had a full position of Palantir. That means at one point I was up 205%. When I got out of it, I was up 205%. When I got out of it, 80% of it, I had to give up 50%. So of that 200%. All right. So I got out at the 171. I got out right around the 170, 180 range. Sold 80% of it, sitting in 20% of it. Now remember, the rule is to sell half. I sold 80%. And now I'm just sitting on a small piece that ended up becoming a big piece, and I'm good. I'll ride that for the rest of my life if I want to. So I ain't never selling my Palantir because I took out a whole bunch. I got out, and now Palantir is resetting. Now Palantir is sitting at 123. Would I buy it down here? I don't know yet. Remember the 200 day. The 200 day is angled down. The 100 day is angled down. You see how everybody's shorting it? Every time it hits this purple line, everybody's shorting. The 50 day is angled down. So you got the 200 day angled down, the 50 day angled down, the 100 day angled down. What is the week doing? Well, the 200 week is angled up. And in fact, if you're thinking about buying Palantir, if I had never bought Palantir ever, I would go to this lowest price, which was $5.84. I would look to buy somewhere in the 50% range. Somebody right here got the memo. Somebody is using Fibonacci. Somebody got in at 107, almost to the penny on this reversal. And all they did was go down here. So like I said, anybody that's like, if you're using Fibonacci, you're scamming. I'm like, are you kidding me right now? I heard somebody talking trash about the Fibonacci, somebody I really respected. I don't respect them anymore. I heard somebody trashing the relative strength index. Now, I do respect that trader, but they're kind of young. So I'm just sure that they just spoke out of line, haven't looked at the RSI lately. So I'm giving them a pass. And I tell this story all the time. There was a intraday trader that I was trading with live, not me personally trading with. I was watching them take trades. And I do that in the morning. I'll go around and look at some of the number one, number two, number three traders in the world. I'll watch and see what they're doing. And they're all using they all have the VWAP and the orb on their screen. I'll say that. They may not be trading off of it, but it's there. So they were calling out trades that day, and somebody in the comment section was like, hey, like it looks like the RSI is oversold, and it looks like there's volume picking up and that we're reversing. Now everybody knows that's my trade. Okay, I love a reversal trade when the RSI goes off and volume starts to pick up. In fact, I'm gonna show you guys what happened on Friday when this happened. So let's say you were trading the MNQs, and I got to get out of here in 3 minutes. Let's say you were trading the MNQs on Friday. Y'all know that I don't like to counter trend, but I will counter trend if that RSI starts to go off. Now watch this, guys. What direction? Now at first, this is the MNQs. Remember, we woke up on Friday, guys, and the stock market was up big. And then all of a sudden we started to sell off. That's why I wait till 9:40. At 9:40, we started selling off. What do you guys notice on this lower screen? I came into the room and I was like, little blue area. I said, the market is starting to get oversold. I think I'm about to take a trade to the upside. Now, I don't counter trend the market, but I will when I see an oversold RSI. Somebody came into the room when this other trader was trading and said the same thing. They said, yo, the RSI is going off and they were about to take shorts. Now, I was in the same room and I was like, yo, I'm about to go long while everybody else is going short, because this is like the what would Joel do counter trending specialty trade. And then it was so funny because he was like, nah, he or she was like, nah, anybody that's using RSIs are probably scamming. And I was like, ooh, in the comment section, I was like, yo. I was like, I don't think that was something that you wanted to say about the market, because the market will humble you immediately. So on that day, they went short. I went long. I made a whole bunch of money. It was the same exact setup. Same exact one. Same exact setup. Volume started to increase. Y'all see this volume increasing? The volume increased as we started to break, as we started to go oversold through the trend line. Y'all know I will take that trade all day, every day. All you had to do was throw a Fibonacci on that bad boy. And if it came down 50 to 70%, y'all know me, I'm taking that trade all day long. Y'all know what the market did the rest of the day? Yep, it went up. Why? Because that's the core. That's my core counter trending strategy that I have taught you guys for free. Now, I will not counter trend the market unless it goes oversold. So for you options traders, and do y'all know what time the market started to counter trend? If I see something like this setting up at 10:30, I'm taking that trade all day. It's already called the 10:30 reversal period. It's called the 10:30 reversal period. You get an oversold RSI at the 10:30 reversal period. I'm taking that trade all day, every day, if volume increases. And it's interesting to me that these guys didn't see this happening. So I was like, maybe they're just young and they just haven't added the stuff that we used in the past. Because I get it. When you first started trading, especially years ago, and in the first classes that you would take, they were on the RSI and, you know, the MACD and all of these basic stuff that we use today. So I get it. You know what I'm saying? But we're smarter now. We're more educated. We're using AI. We're implementing a lot of the new stuff, the new technology into the old stuff. And now what used to be old is now starting to work again big time. Now, I might have just gotten better. I don't know. But I've been using the fundamentals for the last 10 years. And once I stopped making everything so complicated, I said, well, how can I make this simple for everybody else to use? And how can I use a system that covers all time frames? And that's when I created BTG, which is bias, trigger, and goal. And my bias is always going to be a moving average. But sometimes you can counter trend. So I'm a momentum trader at heart. But there are times, guys, when the market just gets too oversold or too overbought. I do not use the RSI on overbought conditions. I will use it on oversold conditions. And the number one indicator that I use for counter trending, for investing, is going to always be the volatility index. The volatility index above 50 has worked 100% of the time over the years. And I keep saying that number because no one can show me a loss that ever happened once that volatility index went over 50. Nobody has come here and said, well, Joel, it lost right here. Because it hasn't. I've gone back several times, 20, 30 years. And I'm like, when the volatility index goes over 50, guys, you have almost 100% chance that the market is going to turn around within the next 3 to 12 months. 100%. It only happens every 4 to 5 years. A lot of the times these stocks are at their yellow brick road during that time. Remember, the yellow brick road is also every 4 to 5 years. You got a VIX that hits 50 every 18 months to 24 months. You have a 200-week moving average where the stock will go to it, every 1 year to 4 years. So sometimes they go to it at the same time. And that's when you get some really, really good buying opportunities. All right, guys, I got to get out of here. We'll carry this over till tomorrow. If you have any questions, any concerns, we'll carry it over till tomorrow. If you guys haven't become a part of my super fans, you can go up to this group chat. You can go up to the Heart Me. When you grab the Heart Me, you can add yourself as a super fan. All right. When you add yourself as a super fan, when you become a super fan, guys, you add yourself to the group chat. The group chat is on my page. You can't add yourself unless you're a super fan. Once you're a super fan, you can add yourself to that group. There's over 115, 120 people that are in that group chat. I just started the group chat probably, I don't know, 3 months ago. All right, when TikTok made groups available,